Effects of high interest rates and high inflation right now. Well, at the moment we're seeing in America that inflation is staying, it's stubborn at 6.4%. What does it mean to you? It means that every 12 years, if you're trying to buy the average good, it's going to double in price. In other words, people are concerned about it because if wages don't rise as quickly as inflation, then of course they're worse off and they have to stretch or they have to work harder, they have to find extra hours or extra jobs in order to actually pay for the goods. How does it affect the economy and how does it affect your investments? Well, because inflation is stubborn and really it's caused by wage inflation being high in certain countries around the world, including the UK and America. That affects the stock market. Why does it affect the stock market? Well, if inflation is high and stubbornly high, then the Fed and the Bank of England have to raise interest rates higher. That means that people's mortgages are higher. That means people's spending becomes lower, and it means companies struggle to make profits. The stock market is correlated to the profits of the companies within that particular stock market. So if we look at the UK stock market, if we look at the FTSE, it's actually correlated to the world index because in fairness, the FTSE 100 is actually international companies that trade around the world. It's more correlated to the world market than it is to the UK market. The FTSE 250, the companies underneath the FTSE 100 are actually correlated to the UK market. So what's the overall effect? We're seeing inflation stubbornly high. It means that certain companies are going to struggle. Think companies with margin. In other words, if costs are going up and you can't maintain your margin as a company, then that company is going to struggle and it's not a good investment. So if I'm personally investing money, I'm going to look for companies that can maintain margin. Particularly, I'll look at the healthcare sector. I'll actually look at luxury goods. They can maintain their margin. I'll also look at energy because there's a shortage of energy in the world right now, and again they can maintain their margin. Agriculture is another one. More and more need for agriculture. Why? You've got emerging markets around the world. They're eating more meat, and as they eat more meat, then there actually needs to be more grain produced. In fact, the figures are crazy. In order to get 1 extra kilogram of beef, you need 25 kilograms of grain. So agriculture companies will also do well. Will the Fed maintain high interest rates? Yes. Is inflation here to stay? In my opinion, yes. So it's an opinion. Nobody knows for certain. So you could get, some commentators are saying, that technology means that we can become more efficient. Inflation comes back down again. In history, if you get deglobalization, in other words, countries putting tariffs against each other, countries fighting each other, then you actually get higher inflation because trade doesn't flow around the world globally. Is this time different? Different? Who knows? Okay, we'll actually see in the future. But for me, rather than take the risk, I want to invest in companies where there's margin. And if I've got margin, I know that I'm going to be in stock that are going to be making me money. Always see a financial advisor. Always take advice. Please like and share the video just to give you information, get it out there of what's happening in the markets and what you should do to invest correctly.